Hi guys, in last video I talking about 65 facts about trading and we talk about 8 and this video I talking about next facts and 8 or 16. Let's start. Number 8 fact is on the way of successfully you need to make many mistakes. The dialogues you mistake need to be studied and carefully analyzed. Only this will help to achieve progress and achieve success. After all, each delay that you work out or will improve your trading approach or find weakness in it. The trader will only be fought befit is write down the paper each his mistake, drawing a confusion in writing the writers down what adjustment he made trading. After that, you should not release in such a thing of trading only on memory predict review on the record will be allow you to consolidate the secured skills and prevent there's mistake in the future. It is impossible to completely avoid mistake in trading, but the successful trader is determined not by the absence of errors, but their love frankly. Number 10, make only those transactions in which you are sure. It's so pretty good fact. Each trader need to have a considerable amount of partners in the order to wait for traders. There is sure of their increase to number of profitable trader. For example, may it's not bother the having to do nothing for a long period of time. He does not make trades until he sees that it's possible to make a trade that suits his trading strategy. As Gribland note, long-term investors prefer to invest in questionable deals rather than wait in for attractive instrument opportunity. The result of this approach is they often have to close their dovish traders as a loss to themselves when an opportunity presents itself to invest in a probably trade. Number 11, trade fact: trade only when you see a good opportunity to make money, not when you wanna make money. Benedict in the end of 2010 opened several dubious transactions in order to reach at least the minimal level and annual profit. Under other cartoon mistakes, he would not have a community these since they did not fit into the strategy. As a result, in transaction both net lost and Benedict was forced to close a year with worse performance that expanded. Opening traders when you wanna to make a profit is a bad idea. You need an open opposition when the market provides this opportunity. You need to trade following your trading strategy, not desires. Next fact: the method of the implement trading idea is more important as transaction. This statement can be seen in the example for of the who opened this or opposition based on assumption that it's March 2000 the double barge in the stock market. He did not consider shorting in the Nasdaq. He felt that the move down would be incredible your trading. Or she implementing the idea by opening long position and bond, both the assumption that the stock making will be down due a bearish tension and capital will leave below assets. This leak was supposed to approve a slowdown in economic growth and well as degrees in internet rotates. If OC had more made his idea, it's really by shorting stock. In this, he would have likely been known out of position by the 40% correction that occurred in the summer of 2000 due to the fact that he went longer bonds interest of short on the stock index. He tried turnout to be very successful. This was not because it's no idea itself, but because of the method by which is what implement. If or she had down short of index, he would have done exactly the right thing, but would most likely have lost money no on the first correct. Next, do not make transaction on wave of Yahoo. Yahoo. A good trader should not fall under the inflection of or stocks market history style. In general, expensive Europe in the market in the first think of approaching trend reversal. Next, market reaction to news may be more important. That's correct. Of the news, according the paint during of the transaction, we was an endless streaming the bad news. He expanded into the potent wood close with a lost after every bad news, but the price dispersing experience did not fall. As a result, Piot decided that the fact the market doesn't reach to news confirms his trading idea and increasable to size in him position 4 times. This deal brought him of the largest profit in the history of work. Next, it's after major macroeconomic event, Eurasian price movement offer occur. According of Danilo, at the dawn of his trading career, two major events occurred in 1971 after the USA about the gold standard or under and began on the stock exchanges. The same gold trend was observed after the Mexico default in 1982. This so they are taken into account in price with a larger margin. In education, the British outlook make prove the government of to take actions that will have impact of the market even more than is a event. And last one, facts. It's volatility and risk and completely different concept. Volatility does not always mean low risk, and high volatility does not always mean high risk. That is, investment with high potential risk can slow low account volatility if not a single risk event and occur during the entire trading period. Selling out of the money options can show low trading volatility if there were not strong price fluctuations during in the trading period, but it's event a total sell of assets in the market. There is a risk of serious losses. Sensible trading, like many exhibit high volatility in their account due to having super profitable traders. However, the sit on the high volatility of his account may control his risk due an asymmetric distribution of his trader. Some options selling trade strategy have low profit volatility and unlinked risk. Other trading approaches show high account volatility with controller risk. This proves that risk and volatility are not synonymous. Guys, it's all fact. Just like this video and check next. Thank you for watching. Goodbye.